Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing fundamental analysis for novices, China fixed asset investments. In this session, we will be looking at some Chinese economic data, including fixed asset investment, NBS press conference, and industrial production and retail sales. If you are not already doing so, we advise you to check a reliable economic calendar each day to be forewarned about economic data releases from countries which might affect your trades. Economic data releases impact the market in various degrees, and you should pay particular attention to the date of the event, the time, and most importantly, the likely impact it will have, usually in 3 degrees: low, medium, or high. Reliable calendars will provide you with the previous data release in each category, the consensus or the expected data release. This will be compiled by analysts and economists who have to come to an average consensus value, and the actual figure will be updated with the data upon release. Each country releases similar titled economic data into the market, mostly on an embargo basis in order to not give traders an advantage and to avoid market manipulation. China typically releases economic data during the Asian session. It is released by the National Bureau of Statistics of China, and due to the complex nature of the coronavirus pandemic and due to the fact that China was the first country to be severely infected by the disease, this is also the first country to have significantly recovered from the disease. Data coming out of China is of greater market focus at the current time than perhaps previously. It is also important to remind ourselves that there is a brewing amount of this quiet between the United States and China and other countries in China who feel that China should have been more proactive when the disease initially broke out. In the first instance, we can see that there is data due for release for fixed asset investments year to date, year on year, and for the month of May in monetary value. Fixed asset purchases is a comprehensive index in the area of construction. These are also known as tangible assets, including machinery, land, buildings, installations, vehicles, and technology. The figure itself shows the scale of the pace with regard to overall economic growth with urban investments. In general, a higher number is portrayed as bullish for China, while a lower number is considered negative. As the whole world looks towards China with regard to how it improves its economic position post-epidemic, outside countries who trade with China view this as a significant release. The data release is followed by a National Bureau of Statistics press conference where a prepared text is usually offered to the media and which will also shed light on the economic situation within China. Also simultaneously released into the market is an industrial production year-on-year and year of May. Again, this has significant importance because it shows the volume of production with Chinese industries, including factories and manufacturing. This data can also affect the inflation, and in which case it is closely monitored by the People's Bank of China, who will adjust the monetary policy if inflation falls outside of its target range. Generally, high industrial production growth is positive, both in sentiment terms and economic terms of the country. It is seen as bullish. If the reading is low or negative, it means that China is struggling to improve its economy post-epidemic. Finally, also simultaneously released into the market is the retail sales year-on-year of May. This will also be viewed by all markets as important because it shows the recovery status of China and whether the general public are feeling confident enough to go out and purchase goods where they are available in outlets which have been allowed to reopen or have the confidence to post-epidemic. The figure measures the total receipts for the retail consumer goods for household purchases, and in general a high reading is a positive one. This is because it shows the economy returning to normal, while a low reading is seen as negative, meaning that the Chinese economy is still struggling. Therefore, during the Asian session, you might expect that stock markets rally if the news is good, and you may find that stock markets fall if the news is bad. Commodity countries such as Australia and New Zealand who export heavily into China might find that their local currencies improve against the dollar if the numbers are high. This is because China is improving their economy and likely to be importing goods from these countries. The opposite will also apply if the data from China is poor. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.